Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news growth is slowing in some key economies and debt is building up fast in others. Firstly, American CPI inflation rose to 2.9% in June, its highest increase since 2012. Core inflation, that's without food and energy, was up 2.3%. Rises like this are undermining their wage gains. In fact, there has now been no gain in real wages over the past year, which is a significant turnaround from good gains recorded previously. And in an interview, Fed Chairman Powell said they are not yet at their 2% inflation goal, even if they are close. Today's data may firm up that view, however. Further gradual rate hikes are still the most likely scenario. Meanwhile, the American federal government's budget deficit narrowed in June compared with a year earlier to $75 billion in the month. Spending and revenue collection both fell, including a large drop for corporate tax receipts in the wake of the federal tax cuts. They're on track to record a $750 billion deficit in their 2018 budget year, easily a record high and 13% more than 2017. The continuing large deficits are requiring them to borrow aggressively, and next week they will auction $135 billion on US Treasuries, $84 billion of which are new debt, and the balance is rollover debt. Congress has lost all semblance of debt restraint. You have to wonder whether any of this outlook is behind the substantial drop in investment by foreign firms in the US. From 2016 to 2017, foreign direct investment into the US dropped by an eye-popping 32%. And since 2015, it is down $180 billion. All this happened as the American economy grew substantially, but it is not attracting investors like it used to. And the European Union has cut its 2018 Eurozone growth forecast as both the bloc's trade conflict with the US and political upheavals within they have threatened to derail their economic momentum. And the central bank in Korea has made a similar adjustment down for their same tariff trade reasons. In the UK, they're coming to terms with the weak position they're in over Brexit negotiations. They've released a white paper that has all sides underwhelmed and British business concerned. US Treasury 10-year yield is now at 2.85%, an unchanged sideways shift from yesterday. But the US Treasury 2-year has inched up, pushing that 210 rate curve lower on its relentlessly declining track. It's now under 26 basis points. At this rate of decline, the positive slope of this key curve will have evaporated by the end of 2018. Some others think it will happen in about a year. Either way, it's a powerful signal that markets think the future is cloudy. The Chinese 10-year is at 3.54% unchanged, while the New Zealand equivalent is also unchanged at 2.89%. And gold has eased back up off its recent lows, up $3 to $1,246 an ounce. US oil prices are unchanged today at just over $70 a barrel, but the Brent benchmark is now down to just over $74 a barrel. And the Kiwi dollar is also essentially unchanged today at 67.7 US cents. On the cross rates, we're a little changed at 91.5 Aussie cents and lower at 58 euro cents. That has the TWI at 71.2. The Chinese have set their currency today at its lowest level against the US dollar in more than a year, essentially unwinding the agreed appreciation that the Americans demanded back then. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.